Richard Geller here. The New York Times has a really interesting article on loan modifications. It's a very, very interesting article. I think the truth is finally getting out about these. So I'm going to go get the paper, and then you can go with me, and then we'll just discuss it real quick. So the thing about the loan modifications is this. The fact is that a lot of people are getting loan modifications, but that it helps the lender temporarily, it doesn't help the borrower. And the reason is because the lender wants to keep the loan on their books. They want to keep it as a performing loan. But for you, the borrower, for your client, it isn't necessarily such a good deal. I'll tell you why. Let me get the paper first. You know, occasionally the New York Times has a fantastic article, and you can read it online. I don't know if by the time you see this it'll be there or not, but don't worry about it because I'm going to have it all covered for you. So during the summertime, this is where I like to be in my rented cottage here. I like to read the paper out here, and I actually read a couple of papers. And right now, interestingly enough, the topic of loan modifications, getting lower payments, is finally bubbling up to the surface on the mainstream media, but it's something that they've really ignored. And there's some key points that are finally coming out, and they really do a good job in this New York Times article of explaining them. I think you really have to know this stuff. You're not going to hear it anywhere else. So let's get on the computer. I think I'm going to switch to the screen cam. And then what I'll do is I'm going to take you through some of these key points about the loan modification thing that the Times brought out and that you can do for your clients right now that might cut their fees dramatically, might cut your fees if you're doing a loan mod yourself. You've got to know this stuff, and it's really, really simple. So here's what the New York Times article says. A vast majority of modifications industry-wide offer a temporary and modest interest rate deduction accompanied by, and here's the real key, an increase in the overall principal owed because of added and what critics contend are often bogus fees larded onto the loan in the delinquency period. Principal reductions? Haha, not according to the article. In California, a total of 356 out of 21,000 loan mods, okay, in just 1 month that they studied, involved a cut in principal. Okay, that's about a little over 1%. I bet you all the others involved a big increase in principal. And these are the people who can't afford it to begin with. And it's these garbage fees, according to the article. Fees are one of the biggest issues with loan mods. And this is an expert they quote. Say you owe $32,000 in arrears that the lender wants to put back onto the loan with 6% interest. No one questions what the $32,000 is, and lenders don't substantiate these fees. I'm telling you, this is a big issue, and this is something you're going to learn in a moment how to deal with for yourself or for your clients. And I'm talking to you if you have want to stay in your house and you need a loan mod, or if you're in the business or interested in getting in the business of helping people with loan mods. It's a tremendous business right now. 3% interest? Possibly. The article says, when presented with these findings, they're talking about these bogus fees. Most lenders and servicers quickly agree to a loan modification. Many of the deals that, as firm as arranged, have initial interest rates in the 3% range. Now, remember it says initial interest rates. They're going to want to offer you 3% maybe for 2 or 3 years. Then they're going to want to go back up to some 6 or 7% rate. There's nothing really wrong with that, but you may want to question whether you can afford to stay there, or whether your client can afford that house. But let me go into how you can accomplish this for yourself or for your clients, how you can get principal reduction, stuff knocked off of the balance, and garbage fees eliminated. But let me just first tell you what the lender wants. It's important to realize what their goals in this whole thing are. They want the loan to be performing. They want to tack on all the garbage fees on the principal. They just want to increase whatever you owe and put it on the principal. And they want you to pay no matter what. That's so they don't have to charge things off on their accounting. What you want is a payment you can afford. You want to remove all the garbage fees. You'd like to get a reduced principal amount if you need one, and you don't want to continue being a debt slave. There's no point in doing what so many people are doing. I spoke to somebody over the weekend, and they're borrowing massively on credit cards, and they're paying their mortgage payments on these rental properties on credit cards. Does that make any sense? It doesn't. It doesn't make sense. What the tool that you're going to use to accomplish this with leverage on your lender is called a qualified written request. You want to contest all the garbage fees. You want to ask the lender to explain everything. The lender, is by law, has to acknowledge the request in 20 days, and they have to respond in 60 days. And in that period. They can't report derogatory information to the credit bureaus. So it's pretty cool. It's a real nice tool if you know how to use it. Where do you mail it? You call the lender to find out. You cannot mail it to the payment address. It has to be mailed to a place where correspondence are received. And you should call and get someone to tell you where you mail a qualified written request. And they may not know, or they may stonewall you. Just get to a supervisor until they tell you. They have to do this. It's by law. And keep track of who you talked to, when, and what was discussed, always. So here's what it should contain: your name and address and loan number. And you might as well include the words qualified written request, and it's under RESPA 12 U.S.C. section 2605E. You can contest and question all garbage fees, interest charges, and everything else. Request an investigation, correction, and proper accounting. It's not necessary to fill out a form to do this. It's any form will do, but you should include in this letter all the things that here. And if you have other information like you question this, you question that, why should this be, why should that be, put it all in the letter. They have to investigate by law. Now here's what can happen. The lender can remove the garbage fees. They can make a loan mod offer to you. They can just say, oh, we'll modify your loan. You could get a principal reduction. You're much more likely to get one if there's all this weirdness involved with your loan. You could get a 3% loan for at least an initial rate. And even if you can't get something affordable, I think you should consider a short sale instead. You may be better off without this crushing mortgage after all. And the Housing and Urban Development HUD has a sample letter you can use. This is what they say, and I'm going to read it just real quick. You put attention customer service, subject is your loan number, names on loan documents, property, or mailing address. This is a qualified written request under Section 6 of the Real Estate Settlement Procedures Act. I'm writing because, and then you describe the issue or question you have and what action you believe they should take. Attach copies of any related written materials. Describe any conversations with customer service regarding the issue and to whom you spoke. You should be keeping track of all that. Describe any previous steps you've taken or attempts to resolve the issue. List a date, time, telephone number in case a customer service rep wishes to contact you. I understand that under Section 6 of RESPA, you are required to acknowledge my request within 20 business days and must try to resolve the issue within 60 business days. Sincerely, your name. And then they point out two things. Remember, the letter shouldn't be included with your mortgage payment. It should be sent separately to the customer service address. And you should continue to make required mortgage and escrow payment until the request is resolved. That's what HUD says. Now, you don't have to follow this format. You don't have to do all these things, but you should include the bases, the basics that we spoke about. And that is your name, address, and loan number, the fact that it's a qualified written request. You can quote the RESPA section if you want. Contest and question all garbage fees, interest charges, and everything else. Request investigation, correction, and proper accounting. I hope this has been helpful for you. Richard Geller, we'll talk soon. Thanks. Bye-bye.